Today is Thursday, October the 17th, and today was a great day. Technically, a lot of neat things happened. Here's the ES Mini Futures, opening at 9:30 with a pop directly up to the Globex high. So that was the overnight high, which we had reached at 6:10 in the morning and not earlier. We started this climb at 3 o'clock in the morning, so that was Brexit news that was starting to hit the wires. But when the American market came on, we hit that Brexit overnight, let's say the Globex high, and immediately came down to the 38.2% value between the Globex high and the Globex low. And then we moved up to 78.6, and we finished off at 50%. Where there was support. So this is a beautiful trading pattern, and this shows you that the mini futures people, and a lot of it is done by computers, are using Fibonacci's to trade with, and they're using the fibs based on the Globex high, the Globex low, and they're also occasionally using the prior day's high and the prior day's low, which we have here in gray. But today was all about the Globex high and the Globex low. We have advancers led decliners by better than 2 to 1. We had reasonable volume, so this was a good day, and we can expect this to continue unless some bad news comes out of the White House. The market now knows that there's not going to be a phase one China deal. There may or may not be $50 billion of agricultural products bought. The market doesn't seem to care about that. The market also has a pretty good sense that the Fed is not going to lower rates at their next meeting, and the market doesn't seem to care. The market is still betting on the consumer, despite the fact that retail sales were slow or slowed down in September, and housing starts slowed down considerably in September. Those are two negative warnings for the consumer. But corporate profits are good. So we may continue to move up as long as corporate profits are good. But what happens after earnings season? Does the market then start to look forward to the fourth quarter earnings, which are going to be based on the consumer, in which case there might be a pullback? So the stock market breadth is going to be higher. We've been churning around the neutral line. It's going to take a move higher, and I think this is where it makes a break, and now is going to be moving, money is going to be moving into the market, and we're going to go to the overbought line. So if we look at the S&P 500, we're only up 0.3%, and we finished with a fat doji, pretty much in the middle. We finished down on the day, so we started up, but we finished below where we started for the day, but we still finished above prior day. So it's a bit of a mixed day, right? What we would have liked to have seen here would have been a green candle, but we didn't. We have a red fat doji, which means we still could be looking at a reverse. But I still think that the stock market, the McClellan oscillator, is the one to look forward to. And what we might see tomorrow is an opportunity for the market just to rethink, because there won't be any important earnings tomorrow. I don't know who's reporting after close today, but if there's anybody interesting, that's going to drive the market tomorrow. I should know that, but it doesn't matter to me because I'm a technical trader. And the technicals tell me that we're going to go sideways tomorrow. Apple, up a little bit better than the market, 0.42%. Very nice. It's still going to continue to move sideways until it has its earnings on October the 30th. Caterpillar, huge jump. I mean, wow, Caterpillar's just doing so well. This trend line is coming into play. This trend line that started back in January of 2018 was hit in April of 19, June 27th of 19, July of 19, almost hit at the end of July, and here we are back again at this trend line. And let's just put an alert here. We're going to create an alert that says price crosses or touches. That's not the way to do it in MotiveWave. You click on the trend line and you say create an alert. And when it touches the trend line, we're going to get an alert trigger. I think we can get rid of this one now. GDX up 30 cents. The dollar was weaker against the pound sterling, so that moved some money from the dollar to the pound, but also into gold and the gold miners. So that's a good thing for us. T ended up the day flat with this hammer here. So let's see, we're still channeling backwards. I have a full position on T. Whirlpool chugging over 160, so it's moved over the 50% Fibonacci line. Amazon, I still haven't taken a position in Amazon. If I did, it would be a vertical call spread out in December the 20th. But we have this convergence here of all of these moving averages. It's broken through all of them, but stopped at the 200, came back to rest on the 200 EMA after being pushed back at the 200 SMA. Now it's going to be difficult for Amazon to break through the cloud. You should take a look and see when Amazon's earnings date is. When I talk to you tomorrow, I'm going to have all of the key earnings dates next week lined up for Facebook, Google, Amazon, Apple. These are the ones that are going to move the market in the next 2 weeks. Amazon has a tough road ahead of it to break through all of this resistance. Plus now you have the Chiku span coming into the 200 moving average, and then it's got candles, and you've got the 50 and the candles. So just generally resistance everywhere. Google only up 0.8% today and finished at the bottom end of its range, so the enthusiasm was dampened and it pulled back. Let's take a look at the volume. Volume has been declining for the last 3 days. Amazon's volume had been moving up for the past 3 days and then dropped off today. So the SPX, look where the Chiku span is, right in the middle of this candle. So it's going to come out tomorrow, possibly underneath this candle. So let's keep an eye on that as the market opens tomorrow. Let's watch for how the Chiku span behaves, and that's going to tell us what's going to happen for the rest of the day. If the market jumps up enough so that we can get into play over this candle, we have a chance of moving higher, and then the whole market is going to move higher. If we don't, if we open up sideways or below this candle, there's a good possibility that the Chiku span, people who trade technically on the Chiku span and the algorithms that do that, are going to push the market down.